What's going on? Welcome back to the channel. So today I want to talk to you about Alibaba. They did drop their earnings. I want to go over the absolute key highlights from the earnings that you need to take away, what the current support and resistance points are, and what analysts are saying. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So it did close at $135 and change today, up 8.09%. The current implied volatility going into the earnings was 5.67. So definitely far exceeded that. And the reason why it was more volatile is because simply it kicked ass. Had $280 billion in revenue in the quarter. That is just mind-blowing, absolutely insane. But aside from that though, you actually did have shorts also increasing leading into the earnings. Alibaba, on a side note, isn't a squeeze play, but it did go up roughly 1.96% to a peak of roughly 2.48. So again, they were anticipating for them to miss on their earnings. Despite everything though, shorts did increase 89,000 shares today. 2.4% of the free float is being shorted. We're expected to be 49.55 million shares overall are being shorted. Alibaba is not a squeeze play, on a side note, just to get that out there. Although you kind of do see some signs of manipulation. So cost to borrow minimum is negative. So meaning there is a broker out there physically paying people to short this stock. But moving on from that though, looking at the call options that were purchased today, you see a consensus for it to be roughly around that $145 to $150 range in the foreseeable future. And then the bears are anticipating for it to be sub roughly 130. So definitely a lot more upside is still anticipated. But with it right now at 135 and then 137 after hours, it is trading between these 2 points. So this R3 and this R2. 141 is going to be that next strong kind of target slash resistance. And it did break above that. So it did have 144 as the high, but if it is able to close above that, then this is where you could see a very nice recovery back into the high roughly 190s-ish. So definitely big things might be coming down the pipeline. But while I'm actually over here, I'll give you a quick overview of what some analysts said today. And most likely majority of them will come in tomorrow, but you did have a couple ratings that came in yesterday. Doesn't logically make sense with their earnings coming out today, but you had 125, 151. Today, though, you did have 140 and 160. Mizuho, James, who has the 63% success rating, and then Jeffries, Thomas, who has a 51% success rating. So pretty good stuff for that. Average of all the ratings put together, $130.80, and that does represent a 3.8% downside. So let me know your viewpoint on that. But like I said, I think more will come in tomorrow. So if you're curious, I can always do a follow-up update to this. But like I said, I think big things might be coming based on a lot of the data points. With that said, this is all the absolute key highlights from the earnings, future guidance that you need to kind of take away from everything. So with that, I appreciate all you watching.
Alibaba targets over $1.6 billion AI and cloud infrastructure investments amid accelerating growth. Earnings call insights Alibaba Group BABA. Q3 2025 Management View, 𝗖𝗢𝗡𝗡𝗘𝗖𝗧, highlighted the company's focus on e-commerce and AI-driven cloud computing, demonstrating accelerating growth with AI-related product revenue achieving triple-digit growth for 6 consecutive quarters. Taobao and Tmall saw strong user growth, with 88 VIP members reaching 49 million by quarter end, growing by double digits. The Cloud Intelligence Group launched Qwen 2.5 Max, a flagship AI foundation model with high engagement, as over 90,000 derivative models have been developed globally. Over 290,000 companies and developers accessed Qwen APIs, with plans to release a deep reasoning model soon. 𝗪𝗠 reported a consolidated revenue increase of 8% to RMB 280.2 billion. Driven by Taobao and Tmall's 9% customer management revenue growth and a 13% revenue increase in the cloud segment, he noted strong financial discipline, with adjusted EBITDA rising 4% to RMB 54.9 billion. Free cash flow decreased to RMB 39 billion due to increased investments in cloud infrastructure. 𝗪𝗠 emphasized strategic divestments of non-core assets, including agreements to dispose of interests in Sena and In Time for up to $2.6 billion. Share buybacks totaled $1.3 billion for the quarter, contributing to a net 5% reduction in share count over the last 9 months. Outlook. 𝗪𝗧𝗛 projected significant investments in AI and cloud infrastructure over the next 3 years, exceeding the spending of the past decade. This includes substantial R&D in AI foundation models and native applications to maintain technological leadership. Management expects 𝗖𝗢𝗡𝗘𝗖𝗧, Alibaba International Digital Commerce, to achieve its first quarter of profitability in the next fiscal year. 𝗪𝗓𝗡 forecasted further improvements in operating efficiency and profitability across several business segments, including AMAP and other loss-making units. Financial results. Consolidated revenue reached RMB 280.2 billion, an increase of 8%, with consolidated adjusted EBITDA at RMB 54.9 billion, up 4%. Non-GAAP net income rose 6% to RMB 51.1 billion, while GAAP net income surged 333% to RMB 46.4 billion, driven by equity investment gains. Taobao and Tmall Group revenue grew 5% to RMB 136.1 billion, supported by a 9% increase in customer management revenue. Adjusted EBITDA improved by 2% to RMB 61.1 billion. 𝗖𝗢𝗡𝗖𝗧 revenue advanced 32% to RMB 37.8 billion, driven by cross-border business, despite an adjusted EBITDA loss of RMB 5 billion. Cloud Intelligence Group revenue rose 13%, with an adjusted EBITDA increase of 33%, supported by the growing demand for AI-related products. Cainiao revenue declined by 1%, while adjusted EBITDA dropped 76%, reflecting ongoing restructuring and integration with e-commerce logistics. Q&A. 𝗖𝗢𝗡𝗘𝗖𝗧, inquired about CapEx and cloud margins. 𝗪𝗧𝗛 responded that CapEx for AI and cloud infrastructure would be evenly distributed over the next 3 years, with significant depreciation impact but substantial customer demand expected to offset costs. Alex Yao, JP Morgan, questioned AI monetization and enterprise adoption. 𝗪𝗧𝗛 emphasized the potential for AI-driven SaaS applications and integration of AI agents into enterprise workflows, highlighting DingTalk as a key product. Kenneth Fong, UBS, asked about e-commerce segment profitability and international business. Jiang Fan noted investments in user experience and market expansion, with profitability improvements expected in key international markets. Ron Kung, Goldman Sachs, sought details on AI revenue. 𝗪𝗧𝗛 cited an explosion in demand for inference, which now accounts for 60%, 70% of new customer demand, boosting cloud margins. Gary Yu, Morgan Stanley, addressed CapEx ROI for cloud investments. 𝗪𝗧𝗛 described near-term explosive growth in AI demand and long-term confidence in GenAI opportunities. Sentiment analysis. Analysts showed cautious optimism, focusing on AI and cloud monetization, profitability timelines, and e-commerce market share trends. Concerns were raised about heavy CapEx and competitive pressures. Management maintained a confident tone, emphasizing strategic investments in AI and cloud, while addressing operational efficiency and profitability improvements. Compared to the previous quarter, management's tone was more assertive, with a stronger emphasis on AI-driven transformation and investment rationale. Quarter-over-quarter comparison. Guidance language shifted to highlight aggressive AI and cloud investments compared to broader operational efficiency goals in the previous quarter. Strategic focus evolved with increased emphasis on AI infrastructure and monetization pathways. Analysts maintained consistent focus on AI and cloud profitability, with heightened interest in CapEx implications and long-term ROI. Key metrics, including cloud revenue growth and adjusted EBITDA, showed improvement, while free cash flow declined due to intensified investments. Risks and concerns. Management acknowledged the impact of substantial AI and cloud infrastructure investments on short-term profitability. Analysts pointed to competitive pressures in e-commerce and cloud pricing, as well as potential risks from geopolitical factors affecting AI development and chip supply. Mitigation strategies include strategic divestments, operational efficiency improvements, and a balanced approach to merchant policies. Final takeaway. Alibaba's Q3 2025 earnings call underscored a strong focus on AI-driven transformation, with substantial investments planned in cloud and AI infrastructure over the next 3 years. The company reported robust revenue growth across key segments, driven by enhanced monetization strategies and operational efficiency. While heavy CapEx and competitive challenges pose risks, management expressed confidence in long-term growth opportunities, particularly in AI and cloud sectors, supported by a strong financial position.